Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories in company reports. Today, we're diving into Weston's latest filing, and let's just say they've been serving up some interesting news, and not all of it fries up perfectly. Before we dig in, if you like your financial news served with a side of no BS, hit that subscribe button and join our community Discord server linked in the description below. So what's the big news from Weston? They've announced their financial results. Now, when companies release these reports, it's like getting a peek behind the curtain at how well they're really doing. It tells us what's cooking in their business and whether they're growing or maybe just a little bit burnt around the edges. The main reason for this report is to talk about their performance. Think of it as the company's report card for the last quarter and the entire year. They're letting us know how much money they made, how much it cost to make it, and what's left over. It's all about their operations and their financial health. The juicy details are all in the press release that came out on July 23rd, 2025. This document is usually where companies try to put the best spin on their numbers, but we're going to cut through the fluff and see what's really going on. It's incorporated into this report, meaning it's a very important part of what they want us to know. Weston stock, the actual shares people buy and sell, is traded on the New York Stock Exchange. This tells us they are a publicly traded company, which means they have to follow strict rules about telling everyone how they're doing. The Securities and Exchange Commission, or SEC, is the government body that oversees companies like Weston. They make sure companies are honest and transparent with their investors. This report is filed with them, so we know it's an official communication. Now let's get to the numbers. It's not explicitly stated in this filing document itself, as the financial tables are contained within the reference press release Exhibit 99.1. However, the purpose of this Form 8K is to officially announce those results. What we can infer from the purpose of this filing is that Weston has released its financial performance data covering its fiscal fourth quarter and the full year of 2025. These reports typically contain key financial metrics like revenue, net income, earnings per share, and sometimes cash flow information. While we don't have those specific numbers laid out in the provided snippet of the 8K, we know the company is reporting on its financial health. Imagine if you were checking your own bank account after a busy period. You'd look at how much money came in, how much went out, and what your overall balance is. That's essentially what companies do in these reports, but on a much grander scale. When we look at financial results, we're essentially asking, is the company growing? Is it making more money than it's spending? Are its customers happy and buying more of its products? For Weston, a company known for its frozen potato products, this means looking at how well their fries, tots, and other frozen potato items are selling in restaurants and grocery stores around the world. We should be looking for trends. For example, if their revenue is climbing steadily, that's a good sign. It means more people are buying their products. If their profits are also increasing, that's even better, as it shows they're managing their costs well. On the flip side, if revenue is flat or declining, or if their costs are rising faster than sales, then we might have a cause for concern. This could indicate that they're facing tough competition, that consumer tastes are changing, or that they're having trouble with their production or distribution. Companies are increasingly using something called inline XBRL. Think of it as a special computer language that makes financial data easier for machines to read and understand. It helps sort through all the numbers more efficiently, so people like us can get to the important insights faster. It's designed to make financial reports more accessible and comparable. When we talk about financial performance, we're really interested in how the company stacks up against its own past performance and against its competitors. If Weston is beating its own records, that's a positive signal. If it's doing better than other companies that sell similar products, that's also a sign of strength. These reports are more than just numbers though. They also give us a window into the company's strategy. Are they investing more in new products? Are they expanding into new markets? Are they making significant changes to their management team? All of these things can impact their future financial success. But of course we see the official sign-off. The Chief Financial Officer, Bernadette M. Margarita, has signed this report. This is a formal confirmation that the information presented is accurate to the best of her knowledge. It's like the company's captain signing off on the ship's log. Now, looking at Weston specifically, we know they're a major player in the frozen potato market. Their success is tied to global food trends, consumer demand for convenience, and the overall health of the food service industry. Think about how often fries show up on restaurant menus. That demand is key for Weston. If we had the actual financial tables here, we'd be scrutinizing things like revenue growth, year-over-year operating margins, and net income trends. For instance, if they reported a 10% increase in revenue, we'd want to know if that's coming from selling more products, raising prices, or a bit of both. If costs went up significantly, say by 15%, while revenue only grew by 10%, that would mean their profits are shrinking. That's a 5% gap where costs outpace sales, which isn't ideal for long-term health. We'd also look at things like their debt levels. A company needs to borrow money, but too much debt can be a problem. It's like having too many credit cards. If you can't pay them off, you're in trouble. High debt can limit a company's flexibility and make it vulnerable to economic downturns. In my opinion, Lamb Weston, like many food companies, operates in a fairly stable but competitive market. Their ability to innovate with new potato products or find more efficient ways to produce and distribute them will be crucial. We need to see if they are adapting to changing consumer preferences, perhaps towards healthier options or more sustainable sourcing. The numbers in their financial reports will tell us if their strategy is working. While this filing itself is a notice, the real meat is in Exhibit 99.1, the press release. Without those specific numbers, it's hard to give a definitive point. However, the very fact that they are issuing this report on July 23rd, 2025 indicates they are keeping investors updated on their performance as required. They're signaling that a performance update likely containing concrete financial figures has been released. Ultimately, for Lamb Weston, consistent growth in sales, efficient cost management, and smart investment in their brands and operations are the keys to continued success. We'll need to see the specific figures to judge exactly how well they're executing. Are they gaining market share? Are they operating efficiently? Are they managing their finances wisely? These are the questions that a deeper dive into their financial tables would answer. Alright, that's our scan of this particular filing. What's your take on companies releasing their performance updates? Do you think they communicate clearly enough? Drop your thoughts in the comments. If this decoding was useful, please smash that like button and subscribe for more insights. And remember to check out the Discord channel, linked in the description below, to join the conversation. Thanks for watching, and we'll see you on the next decode.